Speaking of the RBI, let's get that conversation going. So what will this RBI bazooka, 50 basis points repo rate cut, 100 basis points CRR cut, what does it really mean for companies, for NBFCs, for banks, and for customers on ground? Well, we have with us Mr. Arul Selvan, President and Chief Financial Officer at Cholamandalam Investment and Finance, joining in. Mr. Selvan, great to have you with us. Good morning, sir. So you tell us, we were all going in with the expectations of a simple policy, 25 bips rate cut, but we've got a bazooka. Now, what does this mean for a company like yourself, sir? Because you've already been speaking about growing 20 to 25% this year. So will you bump up that estimate? And what happens to NIMs? Could your NIMs start looking a lot better by the time we exit the year with the liquidity gush?
So surely the NIMs will be better, and we should see this flowing through to the ROTA, I think, over the next 2 to 3 quarters. We may not see much of it in the first quarter, but it will show up in the second and third quarter. As I have told you earlier, a lot depends for us also on how the banks pass on this rate cut by way of an MCLR cut, because a large part of our borrowings still are from banks, and many of them are linked to MCLR. To answer your first question, I don't think the rate reduction alone will bump up the disbursement in entirety, because that would depend on the demand in the market and also how the underwriting goes through. So we will be cautious about scaling up in immediately just because there's a rate cut, and also for our floating rate book, which is our LAP, HL, etc., we may have to pass it down. So we may have a slight and that may not really result in any large-scale upswing in the disbursement. We will be cautious. We still hold on to the 20 to 25% range of AUM growth quarter over quarter. Yes.
You know, how much, sir? How much of your book is fixed? How much is floating? And by the way, I think there was a flash. We'll just try and get it back as well. I think ICICI Bank has cut its deposit rates by 25 bips. And that's the other thing that's happening, that lenders are repricing their deposits also very quickly. Far more, agility on that front than what we are used to seeing in the past. But for you, how much of the book is fixed and floating?
So in our the vehicle finance and SBPL book is fixed. The loan against property, HL, and the SME books are on floating. So almost around 60% would be 62% would be fixed, and the balance would be floating.
Okay. Net, Mr. Selvan, after everything is said and done, and pass-through happens, etc., and you have to pass through, can you give us a broad sense of what will be the broad impact on net interest margins a couple of quarters down the line?
I would safely say around 10 to 15 basis points we should certainly be able to improve, if not better. I am wanting to be cautious about giving any guidance because it comes back to me quoting.
No, we will not.
They keep asking why you are not.
No. That's not the intention. At least we won't do that. So you're saying from a finish line of FY25. Given what has happened over the next couple of quarters, once all this feeds through the system, you should be able to improve margins by 10 to 15 basis points.
Yes, it can be better, but I'm just keeping it cautious.
So closer to 8% rather than 7.5% on a full year basis, FY26 margins, right?
It will, 8 margins, yes, it will be. Sorry,
closer to 8%. Okay, yeah. Got that point, sir.
All right. Hi, Mr. Selvan. Good to hear your thoughts, sir. A couple of questions then. Consumer and small enterprise business. I think as a percentage of your business, 3 years ago, it was only 1%. Now it's moved to around 8%. How do you see this business scaling up? Point number one. And point number two, gold is providing another opportunity. We heard from the RBI governor as well with regard to his take on gold. And you all have forayed into that segment. How large can this business become for you?
The consumer and small enterprise business will continue to be at the sub 10% of our total AUM. This is what we have stated. We will hold it there. You may see some, drop in the initial quarters because we are consciously exiting the fintech partnership line in this, which used to be around 25% of this book. And we are building our own, app which will scale up. So this scaling up to come to the same levels as what we have been clocking on the fintech business would take another 2 to 3 quarters, post which it will start clocking at similar pace what it was going through in FY25. So initial 1 or 2 quarters you'll see some slowdown, then post that it will come back to its normalcy. With regard to the gold, yes, we will be scaling up. We just entered it. It is in a very, very initial stage. I think it's too early, but I would say in the next 2 to 3 years, it should be in the range of around 3% of the overall AUM, because by then AUM would also have grown for us in its entirety.
Okay, 3%. In the next, so that would be what? Ballpark approximately closer to around 1,000 crores?
More than that, around, if I am, I don't know, you will hold me to the AUM.
No.
Overall book. So...
It's an aspiration, sir. Aspiration.
Yeah, let me, instead of the percentages, let's say it will be around 2,000 crores of book. I'll keep it that.
Okay, that's the aspiration. Mr. Selvan, got that. This is significant relaxation, right? I mean, in terms of, especially for gold lenders. So, what the RBI has done, and we've spoken to a few pure gold lenders as well. So, we'll see how this goes in terms of competitive intensity, etc. as well. They really opened the taps in that sense. Now, let's just come to vehicle finance. I was reading a note, and I think you guys had presented at one of the conferences which happened recently. You were citing weaker volume growth so far this year in FY26, low government spending, etc. Could you talk to us a little bit about that, or how are collections looking? Are they kind of lackluster? When do they pick up? What's the forecast?
The vehicle finance, especially for Chola, depends a lot on the rural growth. The monsoon, which in turn depends on monsoon. Monsoon had started early, but there seems to be a small bit of a lull, but we need to see the impact of it. The success of Kharif would be the key driver to make sure that our vehicle finance, growth will be at a better than what it was in FY25. That is on that cautious note we spoke about in the conference you're referring to. But I think we need to wait and watch. Right now, there are both sides of the monsoon. Monsoon initially has been so far has been at a slight deficit to its normal level. So we are being cautious. But otherwise, if that comes in its full form, what it was originally predicted, we should be clocking what we had spoken about.
So, sir, if we go back to your guidance of 20 to 25% growth, within that, what is the kind of growth that you're expecting from the vehicle finance business? Because that's bread and butter. And how much will the other segments perhaps be able to contribute?
See, the vehicle finance should be in the range of around 15 to 18%. This is what we have guided earlier also. We keep it at that same level. So, but we are just giving this word of caution that monsoon's success is what will be the key driver for vehicle finance growth. That's the only point.
18 to 20%, and non-vehicle, I think LAP and home loan will be approximately 30%, right? That's how you come to that number.
LAP will be around 30%. Home loan will be also in the 20 to 25%. The new businesses will start clocking a little bit more. Yeah.
Okay. All right. Final question from my end before we let you go, sir. Last year, I think the credit cost was approximately 1.45%. You can correct me on that number. This year, will it be lower? If yes, how much lower?
It should be lower. We are estimating, again, cautiously around 10 bips lower than what it was last full year, FY25 versus FY26. But we should, again, this also has a lot more dependence on the monsoon, because the success of monsoon would spur, not only the demand for vehicles, but demand for all other white goods and FMCGs, which in turn pushes traction of the vehicle users. Then that would give, impetus for them to, maintain their payments on schedule.
So around 1.35%, 1.3%.
Yeah, 1.3 to 1.4%, 1.35%. I would keep it there. Yeah.
Mr. Selvan, I want to end with, I want to go back to gold loans because that's always a very exciting part of the market, right? And since you've decided to enter the segment, I mean, obviously you've done a lot of groundwork, homework and study. On a steady state basis, given the competition in the market and you have large incumbents like Muthoot or Manappuram, a lot of banks are getting into this business as well in the south. So what is your assessment, steady state basis, 1, 2, 3 years down the line when it's built? What is the potential that you see in the gold loan business? How much growth can it contribute? Can it become a very big driver for Chola? And what's the steady state of growth from a gold lending point of view?
It's little too early days, and the only good thing I can say is that like new guidelines have come, before we even started, so we can start on a clean slate, and it is much better than many of the other competitors who may have certain old, loans, etc., which could fall under the guidelines. But having said that, to answer your question, I would say that we should be able to clock at again the same levels of around 20-25% on a steady state basis. A CAGR over after 2 to 3 years. Initial years, it will look very high, but it will be on a very small base, so it is not really meaningful.
Yeah, but 20-25% growth, steady state, once the base is built on gold loans. Got that. Thank you so much, sir.
Thank you.
Thanks very much for joining us, Mrs. Selvan. Appreciate it very much here on CNBC-TV18 Market.